Hey guys, welcome back. Hope you're doing well. Hope you're getting ready for the U.S. soccer game. I know I am tonight. Let's go U.S. But today's video, I'm not going to focus on a basic earnings recap, and I'm certainly not going to regurgitate some of the same talking points that you could hear on mainstream financial media or probably on many other YouTube channels that focus on memory. Because on this channel, on Market Signal, we follow the signals in the market. We let the signals guide us to where the market is moving next. And I want to show and share with you 5 completely independent pieces of evidence from across the entire semiconductor ecosystem that are all pointing to the same exact conclusion. These signals are all showing us the same conclusion, that memory will continue to be constrained for years to come. Because if you're a long-term investor in the full AI infrastructure stack, meaning the compute, the networking, the energy, and the storage, you have already realized that memory is no longer just a component. It has completely transformed into the ultimate rate-limiting step of global computing. So this is what this evidence is going to share with us as well. And this is why I wanted to make this video today. I just didn't want to focus on Micron's performance today. You can get that in a lot of different areas, but instead, I want to look at the signals surrounding Micron. What does it tell us? What does it tell us about the sector? What does it tell us about Micron and the demand that this company will see for the years ahead? So that's exactly what we're going to focus on in today's video. But if you haven't done it already, make sure you hit like, make sure you hit subscribe to the channel. Guys, thank you as always. I appreciate the support you give this channel, the engagement. It's been awesome, as I've said. Let's see if we can get the subscriber base. If we can get our community up over 35, get close to 36,000 subscribers with this video tonight. That would be awesome to see. So if you haven't subscribed yet, if you like the video, if you've learned something on this channel, just take a moment and hit subscribe. All right, let's dive into the video. Let's focus on the 5 pieces of evidence that I wanted to share with you today overall. Because as I mentioned, I didn't want to just look at Micron, look at the performance of the stock today, look at the candle pattern. We'll look at it a little bit at the end, but that's certainly not the focus for today's video. Instead, I want to look at the signals surrounding Micron. What are they telling us about the company itself? What are they telling us about the sector? We're going to look at Broadcom, TSMC, ASML, but the focus of this video is not just those companies. It's what those companies and what those companies are doing right now can help tell us something about the sector, the memory sector, and about Micron as a whole. Because all 3 of those companies sit at different points in the semiconductor supply chain. And yet all 3 of them are independently validating the same exact structural conclusion, that memory will continue to be structurally constrained for years to come, that demand will continue to outstrip the supply. That's exactly what we're seeing. So let's jump in and take a look at Broadcom and how they performed today and what the signals were from this company that's important to the memory sector. You can see on the board, Broadcom had a solid day. 373.90 they closed up, about $13.50, 3.73% up. In the after hours, they've been fluctuating back and forth between positive and negative. Right now, they're up about 60 cents overall. But the 2 signals I want to call out for Broadcom was one, that this one hit the news wires today, that Broadcom secured their partnership essentially with Apple, and they locked it up through 2031. I'll run through some of the high-level details, but essentially they will develop custom chips for Apple and be a supplier for their iPhone through 2031. And this announcement probably alleviated a lot of concerns for Broadcom investors, because there were fears that Apple would replace Broadcom with its own components. But essentially what this story or what this signal is telling us is that Apple needs Broadcom for complex custom silicon. It's all around inference right now. You can see at the bottom that the boom in inference, by which models respond to users' queries, has made custom chips crucial, increasing the orders for advanced processors and intensifying the competition. Again, critical partnership, because Apple makes up about 20% of Broadcom's annual revenue. But Apple also needs Broadcom just to ensure that they have supply chain certainty in today's environment where there is chip scarcity across the board. So that's the first signal. The second one was all around Broadcom's partnership with OpenAI. And as you can see, that says the bet could be bigger than the market expects. And it's, again, focused on inference. But if you go through the second paragraph here, it says that one customer that will likely play a significant role in Broadcom reaching and potentially soaring past the milestone, which that milestone was 100 billion, is ChatGPT maker OpenAI. In 2025, the two companies announced a massive 10 gigawatt partnership where Broadcom will develop chips for OpenAI. It's all focused on the jalapeno chip. And guys, this is all, again, on inference. If I scroll down here, the case of jalapeno, the company's design is specifically for large language model inference. And you can see in the bottom here that it's importantly, the vast majority of revenue generation doesn't take place until after the design phase when the chips actually get deployed into the data centers. Considering this, when Broadcom announces a new custom chip design partnership, investors should expect to have an immediate sales impact. So we know it's the second half of this year that we expect to see some of this get deployed into the data centers. And that'll be a massive signal for the memory sector overall, because here's what it means. Clearly we know that the brain, a chip of the brain, in this case, a custom ASIC, is only as fast as its ability to access the data. We see that Broadcom is designing these massive LLMs, and they will require ungodly amounts of ultra-fast, high-bandwidth memory to avoid hitting the architectural wall. Broadcom, is building the processing pipelines, but they are entirely dependent on the memory manufacturers like Micron to supply the oxygen to those pipelines. So them building these partnerships with Apple as well as OpenAI, and the amount of chips that will come out of there will drive higher demand for memory products. It'll drive higher demand for HBM, which is right in Micron's alley overall. The second case I want to go through is all around TSMC. TSMC, again, had a solid day today, up about $17, just over $17. You can see on the screen, just over 4%. They closed at $451.79 today. In the after hours, they're up by about another 51 cents across the board. But today, what does TSMC, what does its packaging tell us about the memory sector? Well, what we saw today is Wall Street just put TSMC on an upside catalyst watch. And if you pull up that article, you can see that Citi lifts price target, sees chip maker raising 2026 guidance on AI demand. If we go through some of the details, you can see that Citi raised its price target on Taiwan Semiconductor and said the world's largest contract chip maker is increasingly likely to raise its 2026 revenue growth outlook and the long-term growth targets when it reports its quarterly earnings later this month. It actually will report, I think, on the 10th. I think it'll report next week overall, but we have a massive amount of earnings next week. I think TSMC is one of those as well. But what I want to get down to is probably right here. You can see here where it just says the broker said the advanced packaging demand is broadening beyond AI GPUs into custom AI accelerators, CPUs, and networking processors, making it one of TSMC's fastest growing businesses over the coming years. And if you look at the different packaging solutions they have, whether that's chip on wafer on substrate, or whether that's system integrated chip, or any other future packaging solutions, we're seeing that they are going to broaden their spending here. They're going to increase their CapEx to expand these packaging solutions to meet the demand in the marketplace. So that is also a monster signal for memory providers, because we know when you see that TSMC's packagings, when it is completely sold out or maxed out across the board, we know that memory makers have to stack their HBM directly onto TSMC's packaging architecture alongside the world's most powerful GPUs and ASICs and CPUs as well. So more TSMC packaging capacity means faster release of completed AI clusters, unlocking a massive wave of delayed memory demand. So this is also a really strong signal that we're seeing TSMC ramp up their CapEx to broaden their packaging, be able to meet the demand in the market. That is going to boost the memory piece, the delayed memory demand that we see in the marketplace right now, help to solve some of that bottleneck across the board. And then the final kind of signal I wanted to call out was ASML. ASML had a strong day too, up $55, a little over 3%. You can see in the after hours, they're trading about $4 all. This is the ADR, obviously the listing here in the US, but trading at $18.24.51 a share. You can see it got up a little higher than that on today across the board. But what I want to call with ASML is all around their high-NA EUV lithography machines. What does that tell us about memory? And you can see Bernstein right here, that Bernstein raised their price target and ASML today, all around the CapEx cycle and the lithography intensity across the board. So let's walk through some of those details. You can see in the first part, I think they increased their price target to essentially 2,600 It went up from about 1,700 to 2,600 today. They kept it as an outperform. They kept it as a buy as well. Bernstein said that it materially increased its ASML top-line forecast following the unprecedented AI-driven expansion in both advanced logic and DRAM capacity. But there's some interesting pieces in this article that I don't think that mainstream kind of media reported on. I would call it the smoking gun of the article itself. And that smoking gun, if I scroll down here, you can see it right here. On adoption of high-NA EUV technology, Bernstein said it expects memory chip makers to adopt the tool before logic chip makers do, because DRAM die size is smaller and requires only one mask, while logic dies mostly need two masks due to the larger die size. If I scroll down, you can see the broker said that SK Hynix and Samsung are likely to adopt the high-NA in DRAM production in 2027, followed by Intel in logic in 2028, Samsung logic in 2029, and TSMC in 2030 across the board. And it's all based on this. Take a look at this. The broker estimated that the litho intensity, the share of total manufacturing costs attributable to lithography, will raise from 24% in 2025 to 26% in 2028, driven mainly by DRAM. It's why they rose their price target. You can see the Bernstein also increased the price target for TSMC, for Samsung, for Intel, for SK Hynix, and they increased it from Micron here in the last line as well. Went from 510 to 1,300 across the board for Micron. It gives us a signal that the demand is massive in the market for the memory makers. They are making moves faster than the logic makers overall, and they are partnering with ASML to get their machines so they can meet that demand in the marketplace as well. So those were three big signals across the board for me today that I saw that I wanted to call out, that I think all directly point to Micron. They point to the memory sector as well, because I think you have to notice something interesting about those. None of those companies compete with Micron or any of the memory providers, yet all three are independently confirming the same exact thing, that the world's AI build-out is becoming memory constrained. It will continue to be memory constrained moving forward. Three completely independent companies, three different parts of the semiconductor ecosystem, one identical conclusion. Memory has become the bottleneck. So if those three companies prove the architectural bottleneck, the structural supply data proves the financial upside. Let's look at what UBS and Bernstein projected for the DRAM industry through 2028. Let me pull up this article that was actually published on July 3rd, just to walk through some of the data. You can see UBS raises DRAM and NAND price forecasts amid AI demand surge. But there's a piece that I want to call out here. It's highlighted on your screen. You can see what UBS is saying. The reallocation is creating a supply squeeze across the broader memory market. UBS projects that DRAM demand, will increase by 36.2% in 2027, while supply will only grow at 19.3%. By 2027, UBS anticipates, listen to this, a record 17 percentage point demand supply gap in DRAM. The bank's analysis suggests that memory shortage conditions in DRAM could persist through the second quarter of 2028 across various scenarios. So guys, I think when we look at this piece, we have to say that we don't overcomplicate this. This is pure geometry when you look at it. It's showing us that demand is outstripping supply. UBS explicitly forecasts that for 2027, expected DRAM bit demand growth will absolutely explode at 36.2% year over year. Supply, meanwhile, that is severely lagging behind at just 19.3%. When demand outpaces supply by nearly double, pricing power shifts entirely to the memory manufacturers. UBS estimates that DDR contract prices are tracking to a massive 32% sequentially in Q3 of 2026, followed by another 18% increase in Q4 of this year. That data proves that this industry will remain structurally undersupplied until at least the second quarter of 2028. The structural deficit is real, and it's locked in for years for the memory providers. Think about what that means. If demand is growing almost twice as fast as supply, buyers don't negotiate prices anymore. They negotiate access to these products. That's exactly why UBS believes that the industry remains structurally undersupplied through at least the second quarter of 2028. So guys, that is a big story as well. And that clearly is showing us how strong the memory manufacturers, their positioning and the pricing and the power they will have out through the second half of 2028. And if my thesis is correct, that memory has become an inelastic structural pillar across the entire tech stack, every single business unit should be accelerating simultaneously for Micron. And that's exactly what's happened. So let me show that proof to you. We can walk through it together. It was a great article that was published in investing.com. You can see it here. Why SK Hynix NASDAQ listing is a hidden catalyst for Micron surge. But what I want to get into is just to take a look at these graphs together, because what you see on your board, as I mentioned, is we are seeing their business units accelerate simultaneously. Look at Micron's business segment right here on the chart. It's across not only their mobile and client business, data center, cloud memory, and automotive and embedded business units. But if you look at the purple bars right in the middle, that's their cloud memory business unit. It didn't just grow. It ballooned from 4.5 billion to an incredible 13.7 billion, a stunning 203% total change driven by the AI hypercycle. And it's not just the cloud hyperscalers. Look at the blue bars that you see in the middle. That's the mobile and client business unit. That rocketed from 3.7 billion when we're looking at here, and it rocketed all the way to 11.5 billion, over a 200% total change as well. This is a direct result of the local edge AI requiring more hardware horsepower for on devices. And even the green bars, which are the automotive and embedded business unit here, that surged 223% from 1.4 billion to 4.6 billion. And if you guys have been following the news, you know that some of those 16 strategic customer agreements that Micron signed, one was with General Motors and one was with Ford, and those details came out over the last couple of days. This business unit is only going to get stronger and stronger for Micron as we move forward. So when you step back and you look at the pure product split that they have as well, let me scroll that down. You can see, just take a look at how DRAM and how NAND have been growing over time from the second quarter of 2024 to the second quarter of 2026 across these graphs. If you look at the blue bars, which is quarterly DRAM revenue, it has gone completely vertical, climbing from 4.6 billion back in the second quarter of 2024 to a record 31.3 billion, a staggering 570% total change. NAND in the orange bars, it climbed 381% as well to 9.9 billion. The numbers tell the story. The acceleration for Micron is uniform across their entire business units overall. So let's take a look at what they actually did today. I mentioned I would go through their performance. You can see the stock was up by about $9, a little about 1%. We know it was trading much higher. If you look in the day range, it actually crossed the $1,000 barrier again. It got up to about 1,019 today for an intraday high, but it had kind of a dip right at the end. We see in the after hours it's down by about $13, right about $9.71 right now. So we'll keep our eye on that. But if you take a look at how the stock performed in the candle chart today, you can see it was an absolute roller coaster kind of day. It opened incredibly strong, gapping up, ripping all the way up to that intraday high of 1,019 a share before a dramatic high volume flush that you can see on the screen right at the end there, right in those last few candles. It flushed down, it slammed the price back down to where we see it at the closing bell. So why did we see that sudden drop in the final candles like we see on our screen with Micron? Guys, to me, it boils down to a structural mechanical event called a market on close. Major institutional trading desks and macro hedge funds spent the final minutes of the session squaring up their books. With Samsung's historic numbers dropping tomorrow, large players chose to de-risk and distribute shares into today's morning strength. On top of that, today was officially Micron's ex-dividend date for its 15-cent quarterly payout, which always triggers automated position rebalancing and skewed volume metrics right at the closing cross. As I mentioned, tomorrow morning, Samsung will drop its preliminary Q2 earnings numbers. I covered it in my video last night because we know Wall Street is forecasting a massive, potentially historic $56 billion in operating profit, representing an 18-fold jump from last year, driven squarely by surging DRAM and NAND contract prices. Big money essentially took the money off the table today because they are bracing for a massive structural catalyst tomorrow morning. Large institutions, they're not reacting to Micron's business or their fundamentals. They are managing an event risk ahead of Samsung's report tomorrow morning. And guys, of course, I could be wrong on this as well. And I could be wrong on the thesis that I laid out as well, because if AI infrastructure spending slows down dramatically, if supply expands much faster than expected, or if memory pricing collapses, this entire framework, the entire thesis that I laid out, these 5 evidence points that shows just the strength of the sector and the strength for Micron, it would have to be reevaluated. But when I audit the evidence today, when I look at the evidence we've seen over the last few weeks, I do not see any of those conditions developing at all. So I think the thesis that we laid out today very well could prove to be true. If everything comes together like we laid out in the thesis, this is why I'm calling this video the memory fortress. Not because stocks don't go down, and not because we won't see any more intraday volatility with Micron or the memory sector. That certainly won't disappear. But I'm calling it the memory fortress because every major participant surrounding the memory ecosystem, whether that's Broadcom, TSMC, ASML, Ford, General Motors, the hyperscalers, the equipment makers, and even governments, they are investing tens of billions of dollars based on one assumption: that memory shortages are not ending next quarter. They're not ending probably even next year overall. Wall Street may still be valuing these companies or evaluating these companies like cyclical commodity producers, but industry itself is behaving as if memory has become the critical infrastructure overall for the AI buildout. That is why I'm calling this a fortress overall. But let me know your thoughts. Let me know your comments below. Did you see any other signals in the market? Are you aligned with the signals that I lay out? Do you think that TSMC, ASMLs, and Broadcom signals are important for the memory sector? Drop a comment below. Let me know your thoughts. Guys, I hope you enjoyed the video. If you haven't done it already, make sure you hit like, make sure you subscribe to the channel, and I'll see you in the next one.